Imagine a tool so powerful it could legally keep tens of thousands of dollars in your pocket. And it's been hiding in plain sight for decades. It's not a loophole, it's not some offshore account. It's a legal, government-approved strategy buried deep in the tax code. And the wealthy? They've been using it for years while most people don't even know it exists. Let's change that right now. The hidden power of the tax code. The US tax code is over 70,000 pages long. And let's be honest, most people never read it. But the rich? They don't just read it, they build their entire wealth strategy around it. Because hidden inside are tools, clauses, and incentives that reward one thing above all: strategic behavior. Not working harder. Not earning more but structuring smarter. Here's the core of the trick: depreciation. On paper it looks boring. It's a wealth multiplier. The IRS lets you deduct the wear and tear of certain assets over time, even if those assets are actually appreciating in value. So if you own rental property, or even certain types of equipment, you get to subtract a portion of that value every year as a loss, even if you're making money. That means less taxable income, and more money staying with you. This is how real estate investors pay little to no taxes, even while generating cash flow. With cost segregation, you can break a property down into components: carpets, appliances, land improvements. Each of these depreciates faster than the building itself. That means you can write off massive amounts early, sometimes in the very first year of owning a property. Tens of thousands in legal tax savings, fast. Used by the rich, available to all. This isn't some exclusive club secret. You don't need millions to use it, you just need to own an asset that qualifies, like real estate or equipment. File strategically, not reactively. This is what separates smart earners from wealth builders. While most people file taxes like a chore, the wealthy design their finances around the tax code before tax season even hits. Other hidden tax tricks worth knowing: qualified business income deduction, QBI. Own a business? You could deduct up to 20% of your income. Pay yourself a salary, and take the rest as distributions, potentially saving thousands in self-employment tax. Not just for retirement, these are tax shelters when used correctly. Want to write off the full cost of a qualifying asset in the year you buy it? This section lets you do just that. So why don't most people use these? They never learn it. Schools don't teach tax strategy. They think it's only for the rich, but that's backwards. The rich became rich by using these tools. They fear the IRS, but these aren't loopholes, they're incentives. In fact, the tax code isn't designed to punish. It's designed to guide your behavior. Create housing or jobs? Rewarded. Use smart strategy? Rewarded. Final thought: tax strategy is wealth strategy. If you want to escape the paycheck-to-paycheck trap, you have to stop thinking like an employee and start thinking like an investor. Because the real secret to wealth isn't just how much you earn. And with the right tax strategy, you'll be keeping a whole lot more. If this opened your eyes to the real money game, don't forget to like, subscribe,